Hello and welcome to another Little Big View video from Market Gauge as part of the Trades and Tutorials section of our free resources area at marketgauge.com. If you're watching this on YouTube, please subscribe to our channel, and if you'd like to see more videos and more free information, make sure you go to marketgauge.com /tutorials. Now, this video is actually a response to a comment that I got from the last video that I did. So in the last video, I was talking about how to buy low by using the opening range, and I won't go through the whole thing here. You can go back to the last video. I like to keep these things pretty short. And it was a really good comment in that Raymond was saying that he didn't see how the opening range was really all that applicable to the swing trading. And so in my quick response to him in the text, my thought was that perhaps I wasn't clear enough about the fact that even though I'm looking at the opening range, which is the first 30 minutes of the day, if I'm doing a swing trade, I'm focused on the daily or the big picture pattern before I focus on the opening range. And so the opening range is being used to really time my way in at the right time. Now, it just so happens that in that video, the last one, which I think was entitled How to Buy Near the Low of the Day, I was looking at UNH as one of the recent examples. And UNH, I had said I didn't actually do that one because I was already long, but it was a good example of how you could have gotten long with a day trade or a swing trade perspective. So the day that I was referring to as being one that had good potential was the 17th, I believe. Let's take a look at the no, sorry, the 20th. It was Friday. So it was this one, this day right here. Now, the reason that you would consider this, or I would consider this part of a swing trade, is because very frequently the way I'll enter a swing trade is, so I've got a big picture pattern right here that I'm looking at from a swing trade perspective. And to summarize it, it really should hold above this level, and it is holding above the 10. We've got a compression day right here. And so if I'm a buyer from a swing trade perspective against this low at the right time, now the right time is determined by an opening range reversal, I can, from a swing trade perspective, either bail on it when it takes out that day and just say, you know, this isn't the right day, or I could be a little more patient and sell half at below that low, and then the other half below what I would describe as my definitely not going to materialize into a swing trade today or in this time frame. So I don't want to just buy it on this day, however, unless I have reason to believe that it is the right day to get in. So that's what the opening range is all about. So if we go look at the opening range for that particular day, and I encourage you to go back and look at the video, the last video, because I spent more time on this in the last video. And this one I'm going to focus on swing trade examples. So the opportunity is right here. This red line is the 30-minute low, the low of the first 30 minutes. The pattern happens right here. And so my initial stop could be right below this low, or as I pointed out, half and then another half lower, depending on how you want to play it. All right, so I don't know going into this, and I never really pretend to know where it's going to go. I don't know that it's going to have the biggest day in a month, and I don't know that it's going to have an even bigger day today. But I'm in it because I see this, and as I pointed out, this, and I admittedly had tried at least one other time with opening ranges. One of those times might have even been here and gotten stopped out. But my plan was to stick with it to see if it could make it back up to here. So you could say that I was lucky, or you could say, probably more accurately, I put myself in a position to get lucky, and that's my philosophy with swing trades. Find the right patterns, don't pretend that you know, and take low risk shots. So in this particular case, as I said in the last video, didn't take this one because I was already in it for reasons of using the opening range already. I'm still in it, and so to me, that's how a swing trade works. I don't know how long this is going to last. I would have thought it was going to take me longer to get to this price point, but I'm not complaining, and we'll see where it goes. So here's another example of a swing trade that I did, and for the very same reasons. Now this is IBB, and on the 9th of February, I was looking to be a buyer pretty much against this moving average area. And my thought with IBB was really that I was going to buy a little bit, only half a position, if I could get the pullback, get some kind of opening range reversal in this area, and then I could buy some more as it moved up and have a decent average price, because my approach from a swing trade point of view was that this was just yet another pullback in a really strong trend. So I'm using the intraday opening range patterns to time my way in, and again, with any luck, we'll get a run like we've had. And I've been in it since this day, and I'll show you the entry. I've added, I've taken profits, I've added, I've taken profits, and I remain with a tail. Took a little bit of profits today, and so again, that's my approach to the swing trade. And it all starts with, if we go to the 2-9 here, now keep in mind this daily chart. So I'm buying in this area, really buying against this low in here from a tactical point. And we'll go take a look at the patterns. So this is a 5-minute chart that I'm blowing up. All right, and this isn't one. Now remember, I only did half here because my intention was to give it some room, and my intention was hopefully to buy more higher. I got lucky that I only bought half because it really wasn't a great day. So here's my 30-minute opening range. We have a pretty good pattern right in here and right in here. These are the patterns I discussed in the webinar. And it looks like I'm doing great, but by the end of the day, comes back, and fortunately, right towards the end of the day, seems to close well, and I wound up holding on to it. This is admittedly a day where I might have just given up on it and say I would try again the next day. Now, had I done that, the next day would have been an even better pattern. As you can see, again, here is the 30-minute opening range low, this red line. And we get a pattern kind of in here, but definitely in here. And so this would have been a really great opening range low to buy with a stop below this low day. That would have been perfect for me in terms of looking for a swing trade entry. As it turns out, I think I actually bought more on this breakout up here. I think that was my ad. I don't remember exactly. I don't think I was quick enough to buy more on the opening range reversal on that particular day because I hadn't really gotten my confirmation at that point, but that's swing trading. So you can see as you can pretty much see from the daily chart that as well, that once we got away from this low on the daily chart, the market never took out the prior day's low, which is another thing I talked about in the webinar. And not that it's been easy, it's been pretty volatile, but to me, that's as easy as it's going to get. Never taking out the prior day's low, and you get a run like this. This is, again, a lucky run, but I set myself up to be lucky. So here's one more, just to give you one that is more current, not IYT, IYR. That's happening right now, and here's an example just relating back to the webinar. So IYR happened today. Now I was busy, so I missed it, And you know, we might get another opportunity tomorrow, and that opportunity for me would be looking down here around the 80.16. Now the big picture here is that IYR really shouldn't go back below this 79 level. If I want to take a cheap shot, I might do it tomorrow if it works out okay against the 80 with a stop below this low. These are swing trading patterns and setups that's kind of beyond the scope of this video, but just showing you a current example. The market pulls back. Here's today's 5-minute opening range. Here's your pattern. Here's your low of the day. And while it didn't explode higher today, you close on the high of the day, and you're in great shape. Even if it gaps lower tomorrow, if this is your entry, chances are you won't be hurt too badly, and that's the whole idea. So enter on the low, and hopefully it closes near the high. You could have also taken off half and take less risk off to take it home overnight and see what happens the next day. But really the bigger point with this whole video is that if I'm looking at a swing trade, I would be looking at this and saying, I like this as a swing trade because I think this area should hold, and I think it can go back up to these highs, and therefore how can I get in really cheap so that I can take a lot of these little risks, and I only have to get, you know, 1 or 2 IBBs or UNHs in out of several trades, and I'm doing just fine. So I hope that helps. Raymond, who thanks again for the comments. Hope this helps you, Raymond, and I'll see you all in the next video.